by Real Estate Unplugged, brought to you by the team here at House & House Real Estate. I'm Luke Remington, Managing Director of the House & House Group, and today I'm joined by Simon Baker.
Good morning.
And Zhann Jochinke.
Oh, good job with the pronunciation.
Did I do
Great
right?
to meet you. Did.
We've partnered with you and the company, Zhann. We've got a lot of respect for Property Monitor, and that's the reason we use your software. I think it's commonly, if you go into the broker offers, you'll see how many brokers have got it open and using it daily. So rather than me do it, why don't you explain a bit about you and what you do at Property Monitor?
Yeah, for sure. So I'm Chief Operating Officer of Property Monitor. So I head up the group there. What we do is provide services to real estate professionals. So our flagship product is PMIQ. It's the Market Intelligence Suite. So that's the stuff that your guys are using on a daily basis. That relies on a heavy amount of transactional data, right? So we take data from the land department, we bring that in, and then we use other data sets to augment that data, to cleanse it first, right? Because we want to have quality data in there and remove some of the stuff that maybe isn't exactly what it should be. And then we augment it with additional things to make those records even more usable, and then present it in a bunch of tools and a suite of services back to brokers so that they can then educate their clients.
Brilliant. And there's quite a few of you doing that, I assume.
You'd be surprised how small the team is.
Okay.
We're a small group, less than a dozen here. That's across the board, from the engineers on the development side, the data guys on the analyst side, sales, admin, everything. Right. We're able to do more with less because we've been doing it for so long.
Yeah.
Right? I'd go to say no one knows the data in Dubai better than us. Mm-hmm. Right? We've been the company sort of early foundations around 2015, started commercializing the product 2016, 2017. And what we've learned over time, a lot of it is automated as well. We've built algorithms that start to do the first cleanse of the data, and then we manually go in with people that know the areas and verify it.
I think certainly from our point of view, if you ask any broker or from a brokerage and you ask them what's the number one, I'm sure they would say Property Monitor. You mentioned the word clean and cleanse, and I'm not sure whether everyone understands why it would need cleaning and cleansing, but can you just elaborate on what goes on with that?
Yeah, so we're dealing with dirty data.
Sounds fun.
Not that time.
Not that fun.
No, so if we look at historically, I mean, what land department used to be. So land department's one of our foundational sources. They are they're the regulator, right? They're the ones that manage all the transactions. So they've got the first record of it. What they have in their systems is immense. What they make available is so small. So it used to just be 5 or 6 fields of data. And then under the Open Data Initiative, they launched their own open data stuff, and they put out even more information. So that 5 or 6 fields went to probably about 11 or so. Even back when it was 5 or 6, we'd add so much to that to take it up to about 30 fields of data. So from the land department, you're going to get, let's take YDSFA 7, right? Which means not a lot.
To a lot of people, yeah.
Except for the people that drive down Al-Qudra and see that signboard.
Except those who love Raven Ranches. Somewhere around there.
So it's ranches too, right? Sustainable City, Awaha, Rukan, like it's got multiple within this master Arabic community name. So DOD's just released the data at the Arabic community name. So we've got to now match that down to the common name, the community name that the normal person that your buyer or seller or renter is looking for. Right?
Yeah.
So matching that location, but then going as far as, all right, what views does it have? What type is it? That information is not released anywhere. So we've got other data sets to bring that in. And then sometimes there are some errors in the data, right? Sure. Anything where there's probably a manual key entry, sometimes an extra zero, a decimal goes to the wrong spot, or some of it just needs more explaining, especially around the mortgage data. Portfolio mortgages and other things. You could see on land department or on other sites, a studio mortgage for 300 million recorded.
Okay.
I don't know where
Someone's
that is.
had
I mean,
too much coffee
Bulgari
that
Lighthouse doesn't have studios.
I'm going to pay the monthly payment for it, I suppose. I think we mentioned a minute ago, didn't we, that it's very important for you as a independent what's the word for it? I mean, an independent source of information that you aren't, linked to, to any real estate companies, you're a valuation company with this service. And I think that makes it very valuable to us brokers. If it was us, cleansing the data, it might not be so well believed.
Well, that's the thing.
Right?
We're impartial for it. When we have good things to say, people love us. When we have not so good things to say, some people don't like us, but it's what the data's saying. Yeah. We're just helping people interpret it. And the best thing is we backed it by data. If a brokerage were doing it, it always brings into question, well, did you intentionally leave something out? Or even if you're 100% above board, that idea is just always in the back of someone's head.
Yeah,
Do you have a vested interest?
Yeah, I think it's really valuable, the fact that we can send a nice PDF report to a customer and say, look, as you said, it's not always going to be sunshines and butterflies, but this is the information, and we can then subsequently try and work out the value of that, the next property sale based on that information. So,
look, there's more and more data now becoming available to the consumer, right? So the days of brokers being able to hide behind being the gatekeepers of their own data and other things and only telling what they want, that's gone pretty quickly. So the consumer may know, you don't want the consumer knowing more than you, right?
Sure.
You want your brokers to be equipped with everything there. And also when they do put something out, to be able to talk about the stuff that maybe is an anomaly, right? If you're selling an apartment and you think that it's worth $2 million, and the majority of the data supports that 2 million, but then you've got a comp that's at 2.4 or at 1.4, right? And the seller might know about that. Straight away, if it's 2.4, well, why am I not getting 2.4? And your brokers need to be able to talk about that. Or if there's an undermarket one, well, they know it's not an arm's length transaction and they can share that information.
Yeah.
Well, I think sorry to cut you off, Lee, but for a maturing market, it's very important for these for a potential seller to have that information. I think it's brilliant. Is it something that you're going to try and actively communicate directly with consumers, or is it always going to be something between that you're providing to us brokers, and then it's up to us how much that we then pass that on?
So we're a B2B platform, right? There's no immediate plans to go directly B2C. Our channel has been B2B2C, right? We want to equip professionals in the industry to then pass that information on. We'll have our new products that puts some additional layers of data in control of the consumer, but through a broker. On our app, we do have basic level consumer access. They get to see the last 3 months, a few transactions there, but it hasn't been our target market. Going forward, could it be?
Could it be, do you think? Or is it's going to change?
If it doesn't compete with the people we provide services to, we could do it. But if it does, we're not going to.
Yeah, no, I'm not sure everyone would share my very open view that I think that everyone should almost be entitled to that information. If you own a property and you bought a property in Dubai, I think you should almost be entitled to the information.
What would the harm? And you obviously been in the US, and we've got some kind of ties with the UK, and you can get this information. Yep. You can type in your postal code. Obviously, you can't do that here. But what would be the harm to your homeowner or your tenant being able to go on to Property Monitor and plug in the details? And
so I don't see it necessarily as being harm at all, right? Okay. It is in other markets, and it's not a harm to our business either, right? Because it's not just about data; it's about how you put things around it, right? And we build things that are geared towards professionals using, not just looking at a few raw transactions data, but putting it out there. You want the consumer to have access to it, not everyone's a house in house, right? Yeah. Not everyone is as engaged and doesn't want to hide things, right? There are some that may not want so much out there because they're still coming up to speed or to grips with that. When I was a broker way back in the day in Manhattan, when so much data became available, there was a bit of an uproar because the brokers it used to be index cards for the old MLS.
And then suddenly everyone knew.
But it went so quick, and the old guard kind of didn't like it so much. But you have to remember the demographic of your broker in Manhattan is not the demographic of your broker in Dubai.
True.
You're talking the average age is probably mid-late 40s, female in Manhattan.
Yeah.
Here, tell me what your roster's like. I'm pretty sure it's not.
It's probably a bit younger than that. Something like that. Yeah.
And the credibility of this data, Zhann, I can imagine over the years you've got more fields, you've got more information that's been supplied by the land department. They're improving their technology, which to be honest, I don't know whether it's good or bad, but I can imagine it. You've got to kind of walk before you run. So they can give you certain stuff and you're cleansing it and doing stuff. What is the credibility like? I know you're obviously supplying firm information to banks, and if the banks are relying on it, then it has to be pretty strong, right?
It's strong. Land department's data is good. Right? Okay. It's just that it's not as granular as some would like it to be.
Right.
So it fits purpose for many. We don't just have the land department data. So that when we get it, we trust it highly. We cleanse it, we match it, we use that. But we have additional data sources that others don't. We've got broker transactions, right? So SPAs, MOUs get submitted as well. We've got valuation data in there. We've got active listings in there. We've got so much data in there that it gives the more of a real-time pulse. So the transaction we get it, when did that meeting of the minds happen, right? When was that price agreed? It wasn't the day that the land department recorded it.
No, of course. It's usually a couple of months or as much as 3 months earlier, isn't it? Which is where sometimes us brokers do come in useful if you really want to know what's happened in this time in between.
And that's what we want to provide. So when we were able to take something, I mean, listings are listings, right? Not everyone puts it Some are aspirational prices, some are more realistic prices, and some are just not real listings. So you can't solely rely on listing data. So we take that, and that gives you all right, it's listed, it's on the market. And then we'll look at getting an SPA MOU. So now you know around the time that the price was agreed in the price. And then after that, you're getting the valuation. And then you've got the transaction. So we're able to go along that life cycle of a property as it lists through to when it sells and show all that data on platform. And then when you look at our indices, we called the bottom of the market November 2000, sorry. Good time to buy a property, Luke.
I should be the analyst. I just guessed.
Nostradamus Remington. Well done.
Christopher. I'll do your lottery numbers next week.
Inside joke on that. I love you, Luke. Should have done more myself, but moving on. So we called it, and then when you look at the other indices that are out there, right, they were trailing about 3 to 4 months. Right? It's because we've got that real-time data. So we don't just rely on transactions. We rely on the other data points. We weight them.
So you notice when those listing prices, for example, on the portals, I guess that's where you're taking your information from.
Yep.
When they start jumping up, it's suddenly like, oh, hang on a second.
So we've got the portals.
There
Portals is the least reliable data that's there, and is the one that has the smallest weighting in everything that we do.
Sure.
Right? The highest and most reliable, government data, and then we go down from there. It's almost the reverse of it, right? So you trust the government data, you trust the valuer surveyor data, you trust the broker data, and each time you go down, you trust a little bit less and less. Yeah. So integrity of that data, the surveyors, the valuers, right? It's going to a bank. It's reliable, right?
Yeah, of course.
They're not putting that at risk.
Yeah.
The brokers, when they're giving us an SPA MOU, we audit that from time to time. We've got random spot checks there, and we don't have infringement there. Not to say that there's zero, because we don't check every single one that comes in, but we do spot checks, and we haven't caught people with it. Right? So there's real data. On the listing side, that's the one that's got the biggest grey mark, right? There's so many unknowns with it, and there's so many duplicates.
A lot of duplicates, and also a lot of people listing way too high above the market just because they're like, well, especially when the market's good, right? Oh, let's give it a go. And agents who don't know, for example, we were just talking about a property. They were asking 50% more than it was worth.
You can always ask.
We obviously use Property Monitor for the data to check, and was like, really sorry, but that's you're asking 50% more than the property's worth. So we won't be listing this one.
But it is a peculiar one to buy, as you touched on earlier, that sometimes people can ask for, 20 or 30% more. That I don't know whether you could have done that in Manhattan. I certainly couldn't have done it in Pembrokeshire, South Wales. But
you can always
and
ask,
they get it.
Yeah, and look, there's nothing wrong with trying a price point, right? If you're looking to sell quickly, you can price cheaper. If you're looking to try something in the market, it's going to take a little longer. Yeah. This market is just so different with who the buyer is, the demographic of the buyer. It's not just us that live here, right? Yeah, it's not just locals. It's not just the expats. There's so much inflow and outflow when you've got someone that's coming from another market coming in and not knowing. So look, take ranches for an example.
Yeah.
Prices went up rapidly, and then that's what recovered the market, right? Villas, townhouse, ready property. That's where it first price boomed. That went up 25, 30, 35, even 40% in some of the communities. And everyone was buying. People that live here, people that were coming in. Now you'd be hard pressed to get someone that knows that area, lives in that area, to chase the last sales price by another 5 or 10%. So brokers can't whack that on there and keep running it away, because they're just they've experienced it before. They're seeing it plateau. They're seeing that gap over a couple of years being so much, or the growth over a couple of years. They don't feel that it's sustainable. And then there's other options, right? There's so much that's more affordable now in the off-plan space. Never going to compare apples to apples to our ranches. You're never going to get those plot sizes again.
Sure. And I think that's where you get the odd anomaly, don't you? We've noticed a few, well upgraded properties. So 5 or 10 years ago, they were all pretty standard, weren't they? And you had your house and you lived in it and you made do with your cream 30 by 30 tiles. Now there's a couple of really modified ones. They've gone onto the market, a bit like Luke touched on. We said, that's never going to sell. Yeah. And 2 weeks later, we got a cash buyer. So it wouldn't have valued. I mean, certainly from Property Monitor's perspective, it was 30% over market price. Yeah. Someone's turned up with a big bag and said, I'll take that. Can I move in next week? So they're the kind of things that throw those valuations.
It is, and it's one of the hard things with the data too, because you don't know when a transaction comes if it's been upgraded or not, right? Yeah. We've got a better idea than anyone, because through our relationship with surveyors and brokers and with our sister company Cavendish, they do 30% of the valuations. They've been on site to a lot of these properties.
They're doing 30% of the valuations.
30% of the valuations done within the UAE are done by Cavendish Maxwell.
Wow, 2022.
Yeah.
Wow.
And it's been they've got huge market share. They're the best at what they do. They're impaneled with all the banks. So we've got additional intel from them. Yeah. We also, when I talked about other data sets, we track what's happening, right? If there's permits being filed to do alterations. Sure. You walk into a villa community now, there are more contractor signboards than real estate broker signboards.
Yeah, we're obviously living in Sahil. I've noticed the same recently, like every other house is either being painted or just what on that upgrading things on. I mean, how would a valuer, certainly for Cavendish Maxwell, how would they, determine they come and see my house and they come and see Luke's house and we both claim we've got the best house in Ranches or whatever. How would they value those upgrades? Is there some kind of formula?
Your home's always your castle, right?
You know what I mean?
So you always
is
value
this just
it
a case
more.
of my opinion versus your opinion?
So there's a big difference between when it comes to upgrades, it's subjective, right? From valuation company to valuation company, you're probably going to get different values. Even within the same company, you might have two valuers put different on there. So you have to they look at different things, right? They'll look at the quality, right? They'll look at how much it's been renovated, but they'll also look, you can over-renovate. Right? You can go put gold etching on everything and you're not going to get that back.
And as you said, it's very subjective. Yeah. What might be your dream home that you say, I think that's worth 20 million. I'll say, no, I hate it. I want to rip it all out. I'd prefer to buy a standard one. Yeah. So again, it's very, very subjective, isn't it, as to how the number you put on those upgrades.
Even doing something that's maybe universal in appeal, right? So you're not doing anything gaudy or ostentatious or outrageous, but just something that's neutral, that like you'd see in an off-plan project, right? Most of them are geared towards the mass market. There's a big difference between doing IKEA kitchen, I won't plug any contractors right now.
Really nice kitchen. Yeah, I know.
But one of the ones, or importing cabinetry and stuff, or doing a Dragon Mart special, right? Yeah. Could be a fully upgraded kitchen, and you could be spending 30K, 150, 300K on it. Yeah. How much value does that add to the property is the different thing, and that's where the surveyors come in. I mean, we can do so much with the data, right? Yeah. Brokers have a good idea because they're going to so many different properties as well to be able to help value those upgrades. But
ultimately, it will come down to the buyer to say, hey, and they vote with their wallet, don't they? And say, well, I believe it's worth that because I'm going to pay for it.
What's market value? It's what a buyer's willing to pay, seller's willing to accept, right? As long as there's no financing. Yeah. If there's financing, then it's how much the surveyor is going to value it for and how much the bank is willing to mortgage. But true market value, it's what buyer and seller agree upon.
How much more educated are buyers and sellers, the whole market at the moment? Because you can't pick up, we can either turn on the radio in the morning and we can listen to you, or we can turn on our computer and we can get an update from Arabian Business or The National. Every single day there's a record about this or that. A lot of it to me, Zhann, seems conflicting. And I suppose if we see the whole pitch from you, great. Yep. But sometimes we get companies that just publish their data, but actually their data is such a small percentage of the market.
Yeah, look,
and then you've got someone from outside the country that, what do I believe? Do I believe that? Do I believe that?
So I think people inside the country are more and more educated every day. Yeah. I first came out 2013. A lot's happened since then. Yeah. Everyone from your broker to the brokerage owner to valuers to the buyers, everyone is more educated now that's here. A lot of them, even if you've just been here a couple of years, there's more and more information being thrown at you. There are records happening left, right, and center. And even our reports we put out, right? We put out free information. And a lot of the time we'll do it at the emirate level, right? And that paints a picture of what's happening in Dubai. But within that, you've got so many different micro markets and sub-markets where certain prices might be going up a hell of a lot more than others. So last year in the market, it went up about 11.5% market-wide. Right, previous year 15%, so it's tapering down, which is good. Yeah. But there are some communities that doubled that. They did 20%.
I'm surprised I'm sure some people would be surprised to hear you say 11%, because obviously, let's say take a villa on the Palm, some of them have gone up 120%, haven't they? Which is, again, it takes it completely out of context, really, doesn't it? So I think that makes people worried that Dubai's in a huge bubble. Well, possibly the luxury segment is. That would be another whole conversation, wouldn't it? But the average price is. I was looking at the other day from your own data, and it was averaging out just over 1,500 dirhams a square foot, which was the same as it was in 2016, which was actually a period that I thought it was fairly good value as well. You know? So
that luxury market is the thing that is running away. Right? And I don't know if it's running away in a good way or a bad way, but we had that record sale, right, for an apartment, 410 million a couple of weeks ago.
Yeah. So it's a lot of money, isn't it? It's hard to wrap your head around that, isn't it? You know, we're all talking 4 million, and suddenly someone's all 5 million.
11,000, 12,000 a square foot. It's like,
But then again, it depends what you're looking at. I mean, Luke and I were discussing London just last week, and there's properties in prime central London. If they're upgraded, as we just said, to our very high standard, they're selling it up to around £3,000 a square foot, which is 15 or even more. So 15,000 dirhams a square foot. So actually, on that basis, are these really high end ones on the palm at 11 or 12,000? Is that fair?
Yeah,
it depends where you compare to, right?
Yeah, and I mean, it's that market's always a tough one to gauge, right? Because for some parts, it's shielded from things happening in the economy. They're paying cash. There's no mortgage. There's no default happening on there. The guys that are buying them, they're not spending a lot of their net worth on it.
No. Right? I mean, the guy who's can buy a property for 400 million dirhams is what, whatever that is in dollars. He's probably got a lot more, hasn't he? So
you'd think. Probably,
probably not his first time buyer, right?
I think what's more important for those guys is what happens with their underlying business. That guy that spends 400 million, if his underlying business is impacted by what's going on, then it starts to go, well, you know what? Oh, I can afford it because I've already bought it, right? My carrying cost is ridiculous, service charges, probably, but nothing. Yeah. It just might be, I've got to divest now because my business needs the money. That's where you could start to see that. What might be a little concerning for me is the amount of inventory coming into that space, because you're seeing apartment buildings where 3,000 dirham a square foot, that would put it into the ultra luxury tier, right? Yeah. More and more every day coming. And a lot of them are coming along the water, and a lot of the buyers are Russians right now. Right? There's been a huge drive from that and growth. And as long as that tap's still turned on, as long as that buyer is still coming in, it's fine. But if that tap gets turned off for whatever reason, are we going to see developers that can't sell the inventory? Right?
No, I think that you're completely right. I think that in that luxury segment specifically, there's been a lack of supply, hasn't there, from that negative sentiment period between 15 and 20, and then obviously COVID even worse. So you had 5 years of no luxury properties being launched. Now huge demand, driven by all these various factors. Yeah. And the new supply is going to take a few years to catch up. So at some point, it'll be interesting to see how that leveling out works out, isn't it?
Yeah, I mean, if we look last year, there was about 55,000 units put into market from developers. So new inventory coming in, and that's going to start handing over 2 to 3 years from now. Handovers last year, about 35,000. Right. So that gap's probably right. We want to see more coming in. We know population's growing. But if you start to look at what's going to hand over in 24, 25, there's a lot coming on. Right?
Where do you see most of that supply? Is it luxury segment? Is it mid-range?
So it's spread because
spread evenly? What would you?
I think top of my head is about just over 200 projects last year from over about, I think, almost 40 developers. Right. So and with those developers, it's really spread. The smaller developers tend to be clustered in JVC, right? Arjan, Alphajan, Marjan, those sort of areas, the Jans. They seem to be clustered there because they can buy plots and they can do one-off developments and get started. Then you've got your bigger developers, right? Your EMAs, your Majid Alpha Thames, your Damacs. Look, Damac put almost 6,000 units into the market last year.
Out of the 35, did you say? Yeah. Okay.
So about 55.
55.
In terms of handovers at all?
Not handovers. So this is new launches. Majority of that is from Damac Lagoons.
Yeah.
And they're selling out, right?
But the difference, I would say, with a project like that, I mean, obviously, whether you're a fan or not of it, is that they're reasonably priced. So it's not competing, is it?
That's going to be there.
They're going to be rentals. Let's say they all rent for 100,000 a year, which is probably be quite a fair price, wouldn't it? The owners would be happy, and actually, that's a decent amount of inventory into that sort of mid-range price.
If you look at what they paid and what they're going to rent them for, their yields are probably going to be reasonably healthy. Right? We're not going to see double digits, but we're going to see healthy yields. It's just going to depend how many bought for end use, right? And if they're currently living here and where they're going to migrate from, and then how many bought for pure investment. Right? If you took anywhere where there's 5,000 units and you're going to release them all within sort of a 6-month time frame, it's supply and demand, right? You flood the market with anything.
Of course, and I think most of them probably are investors. The payment plans are fairly aggressive. It's not a 20-80 or something, is it? It's usually an 80-20 or whatever.
If we look at Damac Lagoons, some of the villa ones, there's a high amount of people in there that are actually going to be friend users because they haven't been able to find the villa or townhouse they want in the ready market now. They've seen the prices gone up and they're going, you know what? I want to lock something in. I know I'm going to have to wait 2 or 3 years now. Rents are just increasing more and more, and they've opted for that. For me, it's more the apartment market where I have concerns about it running away too quickly or too much inventory coming in.
And is that at the higher end or the mid-range?
All of it.
All of it, you think?
All of it. You're not seeing much in the low on budget end, like your really super economical stuff, but in that sort of your typical JVC communities, there's a lot of healthy growth there. You've got some developers. I mean, Bengadi's launching a project a month there. And they're doing well and they're selling them. Ellington's got a few there, and those ones do really well. The newer developers coming in is where my concern comes in. Not necessarily in their ability to hand over or buyers not be protected, but are they going to sell in the competition with the big boys that are proven and doing really well, or could they be left with inventory on their hands? And then also seeing, I mean, when I see massive communities getting built, something like Azizi Riviera, where you've got so many buildings and they're handing over all at the same time and they're cookie cutter almost. Right, that concerns me. Demacleon's a little bit different. It's not all cookie cutter. Different themes, right? Different layouts.
Sizes, isn't there?
It's enough interest there, right?
There's not millions of studios, is there?
I mean, even looking at Dubai Hills, when that handed over, it's mixed inventory and it was phased really well. It was staggered, right? And it's appreciated so much now. It's just that apartment space, and also when you start seeing them picking a prime location over a secondary location. Unless the price makes sense, the amount that's going in Business Bay now is just really shocking.
Selected a
Select with Peninsula, I mean, they're probably a standout because they've got their own little micro community. Right?
And they launched it and sold it pretty quickly, and they got those.
But I do think that's slightly unique because I think when you make a master community, you know, take Emar as a prime example. Take the Springs and the Meadows, it's like the original, isn't it? The houses are fairly old and not particularly good quality. It's probably a nice way to put it. And yet the community, because it's master planned correctly and it's managed well, is extremely popular. I think that's what makes a difference. In Business Bay, you're completely right. These towers you've got, which are literally a car park next to the adjoining car park, doesn't make it a lovely place to live.
And that's where Select's done a really good job because they've got that bottom part. It's almost, it's the
it is an island almost, isn't it? And to me, if you have a small apartment, what you do want to enjoy are the green spaces in between, and F&B and retail outlets and all the rest of it, isn't it? Somewhere to walk your dog, which you don't get in a lot of these, tower next to another tower, right? With no green space at all.
Question I think we'll wrap up with, which is probably a question that's been thrown at the brokers a lot more than anything else at the moment, is have I missed the boat? And I suppose it's that kind of, but I could have bought it for this. But what would you say to buyers? Let's look at the buyers first, and then we'll go on to what we would think for the tenants. But for buyers, what would you say?
First thing is you're never going to get it at the bottom, right? When do you know that the market is bottomed out? About a quarter after, right? A quarter or two after. So timing it is just pure luck.
No cheap, but no, you're completely right. Getting it perfectly at the bottom, but actually, we've now been getting best part of 2 years, have we? Something like that with appreciation. So
exactly, and you also don't want to buy at the top. But for every person, the answer is it depends, right? If you're buying for end use, right, it's completely different than buying for investment. Buying for end use right now, you might be buying towards the top. I don't think it's the top yet. If we look at the market cycle, we're still about 12% off the last market peak. Right? The last market upswing only lasted 2 years. We're now into month 26, I think.
Oh, wow. Is it that long?
Is that right? Is that right?
And not every market has to outdo the previous one. Right? Most of the times they do, right? And the fact that we've seen price appreciation moderate and slow is a really good sign that it could stretch out longer. Right? We're at 12%. I think we will get there. I don't think we'll get there this year. Right. I think we'll probably see between 5 and 10. I know it's a big range, but let's call it 8.
Let's be honest, no one can predict the future, can they? As much as people try to, right? It's very hard. I think 5 to 10% sounds quite sensible.
So that's going to run a little bit more. And then it's like, so, all right, if you buy now, it's going to run. Even if the market turns tomorrow, if you're buying for end use, what else would you be doing? Right?
Well, paying quite a lot in rent at the moment, I guess.
Mortgage rates aren't terrible. They're high, right? But they're not terrible. Right? As long as you can cover that monthly payment, that's fine. If it's less than your rent, even better. If you're an investor, it's a different story. What else would you be doing with that money? Right? And what's the value of that money over time? So if you're locking it into a property and then that property declines in price, right? Even if you hold it until the next market cycle, it's what could have that money been earning you elsewhere? So you've got to look at it a little bit differently. So my advice for buyers would be if it's for end use, right, and it meets your needs and you're not stretching yourself too thin, then doesn't really matter.
And of course, it should be a mid to long term view. Exactly. There's no point buying and paying you 4% for 12 months, is there? It should be for what would you say, 3 or 4 years minimum, maybe 5 years minimum?
I would go sort of, normally I'd say 5 to 7. Right? Back in my days in Manhattan, 5 to 7 would be the safe zone. Yeah. Here, maybe I'd go a little bit lower, but it's also looking at the market cycles. Our last downturn lasted 6 years. That's a long downturn.
Yeah. Right? So most market 14 to 20, right?
Yeah.
Okay.
Yeah, exactly. And I bought halfway through that downturn thinking, well, it's gone down a bit, and it's, and actually, it does, in a way, it doesn't matter. You live in the house. It's not a very good investment buying a house to live in. Yeah. You pay a mortgage every month, and it's quite nice not having a landlord. But I completely agree with you from the investment side of it. You then probably take us on to tenants, is that you start to look at rental returns. I think the one thing that is unique about Dubai that I'm quite bullish on is the fact that these smaller apartments, not the ones that have been affected by the crazy palm, price appreciation, but the sensibly priced ones, the studios that we've just been selling today for 450,000 dirhams in Studio City or wherever they were, can offer a very, very good rental income, as high as about 8% that we get on monthly. So that's the bit that I really think is
that
still
return is amazing, right? To have your money working at 8% in property, there's not a lot of residential assets that return that. Right? Commercial can be a different story. Yeah. But on the residential side, look at other markets. If you're getting 3-4% net, right? 3-4% net, you're really happy on an apartment or something.
For sure.
So even for an investor, if the market keeps going up and you buy high and the rents don't go up as fast, right? Yeah. So maybe you're not going to get the 7 or 8. But are you still doing better than buying an apartment in New York and London or somewhere else?
Tax on it?
Yeah. Right.
But the question, I suppose, if I was an investor, and so we've just made a bold statement that, you're 450, you get your 8% today.
Yeah.
Is there a danger, do you think, that with increased supply, the rents will come down?
Oh, there's always that danger.
Potentially, right? But at the same time...
Anything can happen. It's just about being realistic and always looking at the best and worst case scenarios. Yeah. If the proverbial hits the fan, right? Are you going to lose money on it, or are you just not going to make as much money?
Yeah.
Right? Is that tenant going to drop from an 8 to a 6 or a 4? And how much are you willing to ride that out? Right? Look, again, I'll go back to where I live, ranches. Right? You used to be paying for a 4-bedroom to rent there over 300. They dropped into like the 180s, 190s. Right? Yeah. Do you think owners were hurting then after being used to having so much?
Of course, yeah.
And now it's bounced back up to that amount again. So it's market cycles. If you're in it for the long term, you can afford to ride out market cycles, it doesn't matter as much. If you're speculative, if you're in it short term, quick, easy money always comes with inherent risk.
Sure. Right. And I don't think property ever should be. I mean, I certainly remember working here in 2006, 2007, 2008, and they were the really crazy wild
just walk down the line and
people literally were buying and selling. And people say, well, what's different from then till today? And the reality is the market's very different. It was all people who wanted to sell in 2 minutes or 10 minutes or maybe 2 weeks if they were being reasonable. But now we are getting a lot more end users, a lot more long-term investors. And I think that's what makes the market different. And once we hit this peak that you talked about, Zhann, I would think there'd be a very soft landing, if a landing at all, rather than a huge drop.
And I mean, so we did a panel yesterday and an event yesterday, and the topic for the panel was, do all bubbles burst?
Yeah.
Right, so we tried to get a little bit of debate. We went a little for and against with it, and I picked the name of it really carefully, right? Because not all bubbles have to burst, right? There's bull runs always come to an end, right?
Of course.
Yeah. We don't, in the stock, you wouldn't call it a bubble all the time, right? But you have the positive upswing, and at some point it's got to turn. How sharply it turns, right, is what we really want to look at, and how drawn out that can be. Everyone's learnt from the previous market. In 04, 05, 06, and those days of flipping something down the line, they're never going to happen again. But Dubai was so young then. It was an emerging market. It was a hardship post as well. If you were out here, your company was paying for everything for you. Those days are gone.
Yeah. And it was a very immature market and very unregulated. And today it's extremely regulated, very well organised, and we've got, Property Monitor and all these amazing tools to use versus previously we had nothing, right? So it's just
look, the government's done so much as well. There's so much more protection for buyers here buying off plan. Right? Things we're a well-regulated market. Right? There are good protections in place for everyone across the spectrum. So seeing a repeat of what's happened previously, to the extent, highly unlikely. Will the market turn? Yes. When? Let's get the crystal ball out.
Well, this is it. Is that I spoke to someone earlier who said, "Oh, well, I'm going to sell my property. I'm going to rent for 2 years, and then I'll buy it back 20% less." As a final point, is there a chance of that happening, Zhann? From the data analyst perspective,
There's always a chance. But no, I mean, look,
it's probably unlikely. I would think it's a bit of a risky strategy personally. But
I wouldn't be putting large amounts of money behind that strategy. But I'm for what I want to buy personally, I'm out of the market. Right, because I don't think that they're overvalued, but I would rather wait and try and catch it on the downturn because I'm not in the rush, right? And I will probably wait it out and see. But I'm not everyone. Right? And because I'm involved in the data and everything else, of course, I'm the last person looking at put at the top.
So is that sounds like it might just be more out of pure pride than anything else. But I'd be, in a way, it'd be great. I mean, it'd be nice to have everyone have another opportunity. Yeah. I personally think that if you ever, the chance of seeing COVID prices again, probably slim unless we release the next anthrax or something. But
Superb. Zhann, thank you very much for joining us. I think you do a superb job in the industry. I think you're very well respected. I know there's lots of good feedback comes from the office. We hear you on the radio when we read a lot of your reports, and thank you for supplying those. That's all we have time for today. Thank you to our listeners.
Thanks very much. Much appreciated.
Thanks, Zhann, for having me.
Cheers.